Hello again, welcome to another episode of the Uranium Market Minute. Today is Wednesday, February 23rd, and this is episode number 81. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you again for tuning in. As always, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing and always take responsibility for your own choices. All right, fantastic. Thank you for tuning in again. Really do appreciate all of you. Thank you for all of the comments and all of the support. If you do enjoy this content, please like this video, share it around. The more people we have following this investing thesis, the better it is for the market. Hit the notification bell and subscribe to the channel, and you will be notified whenever we publish a new episode, which is almost every day. I'm still working on getting these out to the podcast, the audio podcast channels such as Spotify and Apple Podcasts. That will be coming soon. And of course, we will continue to publish on YouTube as well, possibly looking into BitChute or Rumble as some backup alternative video platforms. So thank you for your patience with all of that. Looking like the uranium market showing some green shoots today, which is interesting because the broad markets are quite weak. It's a bit of outperformance. We noted that yesterday. Another day like today following through. Doesn't necessarily make a trend, but it is definitely a good thing to see. I'm going to speak a bit more on that in the mailbag section. Before we get to that, let's go quickly through the daily scoreboard. We'll take a look at the charts, which are looking quite nice for the day, and we'll wrap up with that discussion on the relative outperformance. All right, so the spot price of uranium ticking up about 45 cents to 43.25 a pound mid-market. It's possible that SPUT is in there buying some uranium. They certainly are raising some cash today as they're trading up, definitely nicely on the day beyond that needed 1% premium to NAV. They did raise 3.4 million yesterday, despite being at a premium to NAV greater than 1% for a very short period of time throughout the day's trading. So they're definitely taking advantage of every opportunity. They're north of 1% premium to NAV to raise cash. Year-to-date totals for SPUT, 4.6 million pounds purchased, 211.6 million of capital raised. They did not purchase any pounds yesterday. They did close at a slight discount to NAV, minus 0.58% yesterday's trading. However, the trust is trading up nicely today, as we'll see in just a moment. They're sitting on 32 million in cash, 45.9 million pounds of uranium held by SPUT, and they've raised over 1.2 billion. Their net asset value is over $2 billion at this point, which is more than 3x it was when they took over UPC last July. Absolutely impressive numbers coming from SPUT. The sector equity ETFs, URA and URNM, neither of them issued new shares yesterday. I did mention yesterday that we went deep into the subject in last week's members webinar. This is 2 hours plus long webinar. That recording is up on our website for members. And of course, new members, you do have access to all of our previous content. So we discussed why this is so important, these ETF flows, and why we think it's noteworthy that the outstanding share count is at their all-time highs, despite the sector being down still about 35% from those November highs. The combined AUMs and the ETFs, 1.86 billion, has shrunk quite a bit since the November highs, primarily due to portfolio depreciation because we've seen depreciation because we've seen the share counts continue to climb. All right, let's take a look at the charts. All right, starting off with the S&P again today, and primarily I'm showing you this so that you can see what we're seeing in terms of outperformance by the uranium equities. This is pretty nasty, down about 1.4% on the day, with the trust trading at the lows of the day. Pretty nasty looking, very little dip buying happening here. And this is going to be the lowest daily close. I mean, I guess yesterday was as well, but we had a lower daily close back in October. Today is looking like, unless we see some strong dip buying at the end of the day, the lowest daily close since June of last year. Pretty nasty, pretty bad looking breakdown on the S&P. So with that in mind, let's take a look at URA. URA up 0.9% on the day. Now it has traded off a bit during the day, probably due to the influence of the S&P. However, absolutely stunning to see the URA trading up almost 1% on a day with the S&P down 1.5%. This is some pretty substantial outperformance. Sprott Physical Uranium Trust having a very strong day. Volume ticking up a little bit, trading up over 3% on the day. not quite a breakout with this upper trend line of the previous resistance within this channel that we've been in for the past many months. However, this thing is so unbelievably coiled. This is getting ready to break out, in my opinion. And I see the downside on this chart and for the spot price as being pretty minimal. Let's look at Cameco. Cameco also up, but very slightly on the day, up less than a 0.1% here. Has traded back down, but also, again, just considering the fact that it's in the green at all on a 1.5% down day for the S&P is noteworthy. So on that note, in the mailbag section here, have had a couple of comments, not necessarily questions, but comments about uranium's outperformance in these past couple of days. And this is all sort of based on, I do get a lot of questions from more beginning investors asking Justin, what do you think about what is going to happen to uranium equities if the market crashes? And my answer is always, well, there's no real way that I can answer that. Okay. I don't have a crystal ball, and it really depends on the type of sell-off. In a true liquidity crisis, investors sell what they own. Doesn't matter if they own cryptocurrencies, if they own gold and silver, if they own oil and gas, if they own Tesla stock, whatever it might be. When there's a true liquidity crisis, we're talking about the March 2020 crash. And there were a couple of days that were, approaching that sort of feeling and sentiment in January, and we did see pretty much everything sell off. However, what we're seeing now is a little bit different, in my opinion. We're seeing the broad market weaken without it really being in crash territory. There's not a lot of fear, but there is a decent amount of uncertainty and doubt about the markets and about the capital markets, about economies, not only in the US, but globally, about supply chain situations, about inflation, about geopolitical strife, the situation going on in Ukraine with Russia. So there's a lot of uncertainty in the markets. That's definitely there. There's definitely some doubts about the presumed resumption of an uptrend or a quote unquote melt up that we hear a lot of people expect from the S&P, and that we have expected. And we've seen over many, many years that every single dip was a huge buying opportunity. And maybe that's still the case now. I don't tend to speculate on the broad markets as much because we do focus primarily on uranium. And we do believe that at some point, and maybe that point is now, that commodities in general, and uranium, of course, included in that basket, will outperform the markets, the broad markets. So on that note, I'm going to share my screen again and show another chart that I think is interesting. So this chart is showing URNM relative to the S&P. And so as we can see, there's this really kind of curious trend line that we are holding so far. If you go back to the really strong rally that we had, which was last summer, starting in late August, and that was when SPUT started buying uranium pretty heavily. We did still have a rising S&P at the time, and you can see that URNM vastly outperformed the S&P, and even since its inception, generally is outperforming the S&P substantially. Now we're seeing that relative to the S&P, URNM was trading down to that trend line just until a couple of weeks ago, and then we look at a day like today, essentially gapping up and moving up strongly relative to the S&P, 2.5% relative outperformance. So I think this is a really noteworthy thing to acknowledge here. And I think that this could be the beginning of some capital flows moving away from growth and into value. And this is something that we've been speculating on for a very long time, that eventually we would see this strong commodities run. Of course, I think that's being helped by inflation, and it is a good thing to see. So I would like, obviously, to see the funds flow increase here. I'd like to see these types of breakouts happen with volume. Same thing with SPUT, with both the ETFs. None of this really gets me all that excited until there's volume coming in, and we're not quite seeing that yet. So, and I don't expect that to happen really, honestly, in the short term. I think we still have some chops, some accumulation to work through. We're still seeing, I would say, overall negative sentiment, although sentiment has been vastly improved, probably largely due to Cameco's conference call and the presumption that we'll be resuming a long-term contracting cycle of significant volume. So, but either way, just good to note that outperformance on a day like today. Last month, a 1.5% down day for the S&P meant 5% down for URA, and now we're actually seeing most of the uranium stocks in the green today. So, I think that really what this is saying is that the markets are recognizing the positive fundamentals for uranium, and they are incredibly positive and only seemingly getting better. We'll go into some more fundamental news later on in this week. Tomorrow and Friday, we'll talk a bit more in the mailbag section about some of the positive developments in terms of fundamentals for this space. But for now, let's just say that it does seem like the fundamentals are winning. Of course, it's helpful that uranium has sold off pretty hard from its, relatively overvalued highs back in November. So that gives kind of a base to go from with this particular, outperformance in terms of relativity to the broad markets. But either way, I'll take it. All right, that's going to be it for today. Thank you for listening. Do appreciate it. Thank you for watching. We'll see you guys tomorrow. Cheers.